you know, and the amount of cuts, but now everyone's rushing back to price in August for a cut. So yeah, what have we moved? 20, 30 pips?
Yeah.
So that's it. don't even bother looking at euro sterling. I bought it at 51 before the CPI date yesterday. It's trading 50s.
Got it. Yeah. All right. Yen is taking challenging. Actually, took out last week's high. No, it didn't take out. Yeah, took out last week's high. So, we going for this level here? What do you think, Kman?
Oh, good morning, Dale. Yeah, good morning. Yeah, I think if the dollar on itself doesn't turn around, I think we are going to gradually grind higher again. Been a bit of comments out about from the Japanese, one of the Japanese whale investors, saying that they would buy some JGBs, government, Bank of Japan. We're still expecting those meetings, but since the JGB yields are very quiet, market's still waiting for it. You're still too hard to be long yen for longer, and I guess we can grind higher unless the dollar turns.
As the world turns was really one of my favorite shows growing up. I'm kidding. It's a soap opera.
I was gonna say something, Dale, and I'm like, well, maybe Dale likes that.
Yeah, Dale likes to, you know, he modeled his life after having drama in every relationship he's ever had. So anyway, the silver certainly held where it had to, right? We were talking about this. Had to hold. You know, it looks like it's probably right up against a flag line now.
Yeah,
So that's so much for, you know, I mean, everyone thinks they know. I remember when I had Steve Miller on last week, and I think Blake was commenting it was a bull flag, and he was saying it wasn't a bull flag. Well, you know, if it quacks like a bull flag, it's a bull flag. So we're probably on our way to new highs. And gold, it's the only one dogging it, and it has just this one level. I was talking about 2240. It clears that, and we should be at new highs. But maybe it's going to take still the dollar coming off. Yeah, coming off for that to happen.
Yeah, I think one of the one of the reasons again why it's been underpinned despite the rest of the dollars not doing too badly is China giving hints that they may let the yuan go perhaps just a bit. And typically when people in China feel that the Chinese yuan may weaken, they may jump into gold. So that may be one of the reasons why it's holding up as well. And yields are not too big right now. Yeah, I think it has quite a bit to do with China as well, and the fact we couldn't hold below 2,300 on gold.
Yeah. Yields, as far as yields, I don't think they have much more in them than 435 before
we'll
we
see
break
on
down.
the data.
Yeah, so we have data in 25 minutes, right?
Yeah, you know, and I was gonna say, you know, probably one of the most interesting things that happened overnight, obviously, was the Swiss National Bank. So I'm obviously Dale and I were asleep for that, guys. So Ryan, what did the market do as soon as we got the cut?
Picked up a paper and wanted to see when the football was on. No, it's market was a bit surprised with the cut, really. Not really surprised, but you know, there was a bit of surprise there. And yeah, you know, the reaction's clear as day.
Okay. I'll tell you what, this is with the dollar up, it's a pretty meager response in USD CAD. You know, maybe we could bounce 740, but it's one of the only ones with the dollar. It's lower on the week, and actually have with 1 day left a chance for a 2-week reversal, which means just, closing under this big up candle. And you look at this up candle, if you went home that Friday, you sure would have expected, some upside. And instead, there was no follow through. So, for USD CAD bulls, be careful because, we're definitely testing some support at 680. And we're really, we didn't get there. 680 is where the trap door, I think, opens if we take that out. Equities, what a surprise. Their S&Ps are up about 19, confirming NASDAQ's up 73, confirming. So, I'm starting to build a position. I'll probably get filled this morning on a triple bearish ETF in NASDAQ. I don't expect that my timing is going to be good. And I don't even have real good divergence, but I'm going all the way out to December. And they're fairly reasonably priced. I could buy the 10 calls, which here's a strike, for like under $1. So that's what I'm doing. That's my first probe into this. And 10's not out of the question. In April, we went up to, 13. So I bought the 10s. That would put it 3 in the money. And if it ever, just corrected what it did into last October, 24, 16, 8, we could rally back to maybe this gap, 16. I know it's silly to talk about the market actually going down someday, but between now and December, I'm thinking there's some hiccups along the way. So I'm doing that this morning. That's it. VIX too, we've made all these new highs. I was waiting for one more new low. I don't know if we're going to get it. We keep making new highs and keep holding this low. It's 2 drives, and sometimes when I wait for the third, the train leaves the station. So that's something else, if you really want to hedge, why not go beyond the election to hedge in case, there is some problems with this election. And I really don't think it's going to go smoothly, happen smoothly. And one thing I'm worried about is on the 11th is a sentencing for former President Trump. And, if they remand him and he can't go to the convention, everyone should go watch the movie Civil War, because there's going to be definitely some violence in our country if that happens. I hope the judges doesn't, stick to principles and give half the country a chance to be angry and act it out. So, that would be something, wouldn't it?
Have you stocked the bunker up, Dale?
What's that?
Have you stocked the bunker up?
He's got a bunch of ramen noodles.
Oh, you're talking about food storage and things like that?
Dale's bunker, where you go when things get a bit heavy.
I guess I'm just going to have to eat my silver coins. Which,
hey, at least you have something to barter with. I mean,
yeah,
that's good. That's
the whole reason for silver coins is, they will be if you ever want to, have problems with currencies. But I also think you should have some cash, and I'm not giving out my address. So anyway, I don't know about you guys, but if that happens, I think that lights a fuse.
We'll see, Dale. I think that it's a little early to see social unrest, but things could get volatile. I think this election season, and if you don't mind, I'll take over from here.
I've scared the crap out of enough people.
Yeah, I'm gonna go ahead and let's talk happy thoughts this morning. No, seriously though, I think the elections that you were seeing, and whether it's in starting off this year with with what happened in Taiwan, and just kind of the ruckus, the rumblings to the European elections here over that are upcoming, to the UK elections. You're just seeing volatility start to pick up, and it's going to be heated. And going into this year, this is going to be like this is the time that you want to be involved in. Oh, by the way, copper's ripping. Stocks are showing a little bit of weakness this morning, just as traders are coming in. Just FYI. And I wanted to look at the S&P because we're right at wedge. This is an ascending wedge support. That's something that in the ForexAnalytix chat room, if you guys are in here, this is a chart that we just put up just a little while ago. So you got to be, when you have an ascending wedge like this, you can see it right here. It suggests that we have the risk of rolling over, at least near term, just near term. So that's one thing that I think we all should be paying attention to this morning. Yeah, I want to circle back though real quick. Let's talk about the Swiss National Bank. So the market was pricing about a 60%, if I'm not mistaken, 60 to 60 over 50% chance of a cut. A cut was delivered. That has stopped the Swiss franc strength in its tracks. We see the Euro Swiss really stalling around the 618 retracement. We're still in a very severe downtrend, and I would be a little hesitant selling Swiss francs, just knowing what's happening over the course of the next couple of weeks with the French elections. But at the same time, here we have the Swiss National Bank that's probably trying to weaken its currency based on what's happened over the last several weeks. Some of the unintended consequences of the turmoil that we have in Europe. So, Kman, what do you make about this, and how are you going to position yourself in the Swiss, or are you just going to leave it alone over the next couple of weeks with the French election happening?
I'm leaving the Euro Swiss alone. I think Jordan's message was relatively clear. In short, it says sell Swiss, but not too fast. So they cut. That's a fact. So and cutting means that they felt comfortable to be able to cut. He also made reference to the Swiss being stronger due to political turmoil, keeping all options open on interventions. So I think he didn't say as much, but they were not overly happy with the strength of the Swiss. So we could see Swiss remaining offered, but I don't think Euro Swiss is a good vehicle to express this. I bought some Antipodian Swiss, Kiwi Swiss. I did more in particular. And that's it. But it may be a bit of a slow one. It may be indeed that Euro Swiss is holding Swiss back from weakening too much against anything, basically. But it was a dovish meeting. There was no secret about that.
Got it.
Yeah.
Well, Ryan, I'm gonna shift over to Ryan really quick about Sterling. Are you surprised? I mean, I'm not really surprised that the votes came in as expected at 2.7, but are you surprised about the weakness of Sterling following this move?
No, not really. I am surprised about the vote myself. I thought it might have gone a little bit stronger towards the cut side, just to send that bit of a message.
Yeah.
As I say, the fact that it did go 7-2, but in the minutes it said, some of those 7 said they were close to a cut. It was a fine line. That's what the market's picking up on. So even though it's a hold, and as I say, the market had been pushing out the timeline for cuts towards the end of the year. September was the growing number. August was getting phased out, and everyone's just running back to August again. So we're just trading with all these central banks that haven't started yet. We're just trading the calendar, whether they cut in August or September. It's not trading whether they're going to cut at all. Everyone knows it's coming. The market needs to do something. And what will happen is the BOE might cut in August, and it'll be the same as all the others. Right, we've had our cut. Now we're going to sit back and see what the data does for the next X amount of months.
Yeah. All right. Well, technically, I'm very, even though I don't have any Sterling shorts because I got up right as the BOE was happening this morning. We've got the 127% extension of the last, false breakout higher. The false breakout should lead to a breakdown. We are seeing a bear flag pattern that does point to 125.30. So technically speaking, it's doing what it should be doing. And I guess if we do see a little bit of a correction in equities, and the reason why I say that is because we are, probing an ascending wedge support right now. And if the S&P just comes down to channel support, which would be all the way down, here around 5,300, it's not going to disrupt any of the uptrend, but we can see a little bit of a pullback. We see that the dollar might firm up a little bit, and that could be one of the catalysts that continues to drive sterling lower. I would think, but sterling downside seems very limited to me because of the big bearish breakdown of euro sterling. And I have to imagine that euro sterling is going to continue to stay under pressure ahead of June 30th, which is 10 days from now when we get the French election. So that's one of the things that's holding me back from getting too terribly bearish the pound. But I don't know. I definitely am looking at it through that lens. Hey, another thing that happened overnight, we had the Norges Central Bank. They met and they basically said, and correct me if I'm wrong, but based on the notes that I was reading, they basically said that their economy is strong and they might not cut if it continues to stay as strong as it is. So there was a pretty hawkish hold, right?
Yeah, firm hold as I expected. So they are now pushing back against rate cuts in 2024, expecting 75 BPs in 2025. So they are still on their strong line, and the Norwegian kroner reacted to it. So yeah, a bit, I would say, relatively as expected. That's what was the expectations, but they do confirm, and so the Norwegian kroner keeps its bid tone, also helped with Brent and gas,
All right. Well, and here I'm sitting here, and I know everybody probably feels this way. Stelios, whenever Stelios pops on to the F.A.C.E show when he's not on some Greek island, he always, references how the Norwegian krona should be so much stronger than it is. But, price is the ultimate, judge and jury here. Yeah. I mean, the fact of the matter is the US dollar Norwegian krona is not far off of the, post-COVID spike highs, which, if you look back here, I've always thought those are generational, but the fact of the matter is we've held up pretty damn well. I've played it to the short side. I played it to the long side inside of this triangle, but I think we just need to continue to respect it. One of the other things I wanted to mention, there's about half of you guys weren't here yesterday. We still broadcasted on Juneteenth yesterday, and the market was taking advantage of very low liquidity and pushing the US dollar, South African rand outside of this triangle. We had very divergent relative strength. You can see prices moving lower, relative strength wasn't. Pushed below support. Easy money as far as stops goes for a lot of market makers. They flush those stops. Now you gotta watch out. Days like today, especially if risk aversion picks up a little bit and we see maybe some profit taking in this extremely bullish trend, you could see the dollar rand, pop its head back up into the middle of this range. So something I think, again, if you were on the F.A.C.E show yesterday, something we talked about, but something definitely worth noting today, especially on it's up on a day a little bit more aggressively than we've seen. I didn't see any overnight news. Did I miss anything? Just make sure I didn't miss anything. Ryan came.
Not really. Bit of warnings here and there, but it's more a case of I think the positivity post elections waning a bit, and now wanting to see what that coalition is really going to tell us, I think it's kind of encouraging that we are back above 1808, but we need to get over 18 and a quarter, I think, to really start pushing higher again.
I'd agree with that. That which would be approximately this level is where we need to start seeing us break back above. I agree with that. So something to keep in mind for those of you that trade the dollar rand. I know some traders like myself, I trade it quite aggressively. So does Kman, and I know there's a few of you out there that do as well. It's one of those currencies that you just have to know how much risk you're taking. It tends to be very volatile. Dollar Rand is one of those that can be up 2% or down 2% in a blink of an eye. So you have to really manage your size when you're trading this dollar pair. This dollar pair tends to be quite aggressive, kind of like the Mexican peso. So one of the other things I wanted to mention, and then we're going to go around and talk about the weekly unemployment claims, is I want to God dang, I just the dollar yen. This is something I talked about on the week ahead video, and I want to show you guys really quick this Wyckoff setup, and this is something that we've discussed. Like I said, I discussed this on the week ahead video, and for those of you that are not familiar with this pattern, this is a pattern that you use after a very strong accumulation or distribution move. The dollar Mexican peso was a perfect candidate for that when it was trading below 18, because it had this accumulation period after a sustained 3-year breakdown. Obviously, you look at the dollar yen's had a multi-year sustained uptrend, and so we're in what I am looking at as a distribution, Wyckoff distribution pattern. So one of my arguments have been this week has been, I wasn't sure if this spike that you see right here above 158, the one that we're currently, Dale, you mentioned it earlier, we probed yeah, and talked about it earlier. I wasn't sure if it was this right here is the climax. That was this. All right. I don't expect that to be taken out, by the way, just so everybody knows. This, if this is a Wyckoff, the 160 level won't be taken. Now, I wasn't sure if the failed rally attempt was quite there on that little spike. I'm thinking we could still see 159. That's what I said on the week ahead video. And I still think that that's entirely doable, especially given today we have weekly unemployment claims. So everybody's watching weekly unemployment claims. Why? Well, because after seeing us, bleed lower in weekly unemployment claims over the last couple of weeks, I think what was last week? 244,000. I'm not looking at it right now, so I'm just guessing. I know it's around 240,000. If we see that come back down, and everybody goes, okay, it was just a scare, like we've seen a couple of times over the last few months, the dollar yen could very easily be trading up towards 159 today. However, the flip side to that is if we see something, let's say closer to 250,000, let's take a look at what was last week and what is
242.
It was 242. Okay, thank you very much, Ryan. So today, if let's say the market's looking for 235,000, let's say we have 255,000, and we start getting towards that 260 level, which is, by the way, I think that is the level that everybody should be looking at on weekly unemployment claims. This is when it really starts to matter, is when you start getting above 260, 270, which we haven't seen since. You have to go all the way back. I mean, you have to go way back. There we go, back to June in the summer of last year. So exactly a year ago, when we were up in the 260s. Once we start getting up here, this is where things get a little nervous for the market. So if we start getting up into those levels, the dollar yen could very easily slip back down, and then that secondary Wyckoff level might be, this may have been it, but it is a setup. It's a pattern. It's something I'm closely monitoring for a bigger reversal. It might have more to do with not weekly unemployment claims, but maybe with the BOJ and Ministry of Finance in the coming days. But it's something I think we should all be keeping an eye on. Now, we got about 6 minutes before the data comes out. Ryan, what is hot and heavy on your plate today? Come on, volatility is low. I know volatility is low, but I know you're itching to do something. So tell us what you're itching to do. Not watch football. Not football.
Too late.
Not football.
I got it in. No, again, just looking at ranges. If we get a bit of a further move south in cable, maybe towards 126, maybe 126.5, I might look for a little counter. It's range playing I'm in the dollar rand along with a few of our roomies. I've gone long dollar China as well because we had those headlines yesterday, and
so great blog, by the way. Great blog.
Well, thank you. I got out my shorts yesterday, sub 128, 728, and that looks to have been a good move. And I had an itch to get long, so I picked up a bit this morning.
Nice.
Yeah, so that one could be on the move. The old dollar China. We've got a bit of a breakup above 728, and looks like the market's paying attention to those comments yesterday.
If you didn't pick up on Ryan's reasoning, then just go read his blog right here on the US dollar CNH and why China might open the door for higher prices. And you should definitely read that blog. We put it out on social media all over the place yesterday. So thank you, Ryan. Kman, what is hot and heavy on your? And by the way, Ryan, and in the Euro 2024, let me just say this: you and I are up in 30 minutes. I'm Serbia. Ryan is Slovenia, right?
You're going down, mate. You're going down.
You're going down, pal. And and you and Grega, by the way, Grega is in Germany right now. He's going to be reporting to us in the ForexAnalytix chat room from Germany as he's going to, I think, the Saturday game. Slovenia and I forget who else. But anyway, is it England? Oh, it's going to be a good match. Yeah, he's in Germany watching that game over the weekend. So you're going down, pal. All right, Kman, what do you think is going down today?
Oh, what is going down?
In the markets, yes, in the markets.
That's a good question. I'm a little long dollar China, but I bought it in the 726s. Some of us are a little bit early, right? What am I? I don't have much on my plate, really.
But what do you think?
Long dollar rand, bit of Kiwi Swiss, bit of Aussie dollar, bit of Aussie yen. But I'm mostly long in my trading book. I've got a long only book. No, I'm joking. But yeah, it is just the way that I'm positioned right now. US data, I'm not even sure that we're going to see big moves unless we see big outside results. We've got the Fed, which is an interesting watch, especially on the employment, I would say, front end, and probably the prices, although it's manufacturing. So yeah, I'm still not a big fan of the euro. So I don't like euro to be precise. So if I would trade a short dollar because of the numbers would tell me to be short dollars, I'd rather have the Aussie, the Kiwi, or something of the likes.
Great. All right. Well, Dale, we're getting ready for the data. What are you thinking right now?
Holding shorts in Canada, stops over 38.5, add-on under 136, and buy breaks in T-notes and bonds. Buy any pop in yields back to 430, 435.
Dale, you'd probably like this blog that I did the other day on the on the 10-year. Yeah, because this is where big resistance is happening right here at the 618 retracement triangle resistance. We get a breakout. Yields are gonna sell off, and I think positioning is gonna play a big part into that too. So I'm with you there. And the dollar CAD, just so you all know, positioning is very, 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 very extended, being short Canadian dollars from a CFTC positioning speculator standpoint. That's what has made me very hesitant about being short Canadian dollars the last few weeks. That's why I just kind of stay away from it. Because
short USD CAD or short CAD?
Short CAD, like being long dollar CAD. I'm very, very hesitant about that because of the aggressive large speculator positioning that is they're short Canadian dollars. They expect the dollar CAD to run to 150 or something. I mean, that's the market is expecting that, and they're heavily in that position. So I'm a little nervous. That doesn't mean they can't be wrong. It just makes me a little nervous positioning myself that way. Anyway, data is coming up here in literally 2 seconds. Here we go. Housing starts a little worse than expected. Building permits a little worse. Initial jobless claims ticking higher, but not as bad as last week. So,
Not much action.
continuing claims a little worse. I mean, it's definitely not trending in the right direction. But the flip side is I don't think the dollar is going to get whacked on that news. The housing starts are no good. Philly Fed, as you pointed out, Kman, Philly Fed's a little weaker, eh?
Yeah, it's a little weaker, but then there's a bit of a counterbalance between the capex is coming in a bit weaker. The new orders negative, employment negative, but not as negative as last time. I mean, this is I don't know if this is really worth initiating something new on the back of it. Let's say slightly weaker set of global data.
Yeah,
those housing numbers, those starts, that's now the third drop and third miss of expectations, I think.
Yeah, and that's something that I think is that as an American and understanding the housing market for those of you that maybe don't live here. One of the things about these housing starts, I mean, if I was a home builder, I'd be building so many homes, as many homes as I possibly could, incentivizing buyers to come in, and that they have been doing that for years, and I would continue down that path because we have a housing issue here. No one wants to move, and we have low supply. So I'm surprised that these starts and building permits are so weak, but it also factors in a lot of multifamily housing, apartments, office buildings, which no one's building. And we've built so many damn apartments nowadays. And I'm sure it's that way anywhere across the United States you go. Everywhere I've traveled this year for my kids' soccer, it's just like there's apartments everywhere, new builds. So maybe that's starting to slow down, and maybe that's going to start to affect the economy a little bit. It's interesting data coming out.
Rate hikes for you. That's rate hikes for you.
Yep.
Start to put a hindrance on demand and costs of building all that stuff and borrowing money to build and that sort of thing. These are the little signals you need to look for. As I say, it's 3 months now lower starts. The NHAB was lower yesterday, so all these little flags are mounting up, mate.
There's something, and I know we're bringing Rohit in, and he's great technician. You guys make sure you stick around for Rohit. He was one of my favorite guys that Dale's turned us on to over the years. If you go into the news and research room, I want to show you this little snippet right here. This is fund managers and what everybody's looking for as far as a no landing and soft landing. That is the majority of the market right now. Very little people expect a hard landing right now, and it just shows you how lopsided and one-sided the market is in their expectations. And when everybody expects one thing and everybody's on one side of the boat for one thing, that's when these little data points that Ryan's pointing out here really start to matter and really should start getting people's attention. So anyway, everybody, thank you for being with us today. Tomorrow we will obviously be here because at the end of the week, tomorrow we have, even though we have Canadian retail sales live here tomorrow morning, the PMIs for Eurozone, UK, and US are coming out tomorrow. So we're going to see if that US exceptionalism story stands the test of time. So make sure you guys are around for that. Make sure you're at the Flow Show tomorrow morning because they'll be talking about what is happening with the Eurozone and UK PMI data. Ryan, what time does your show start in London?
10:30 UK time, BST, 9:30 GMT.
So be there. And if you don't know how to get there, go to ForexAnalytix.com, go to where it says webinars and find the Flow Show, and you'll hear Ryan and Kman tomorrow morning. So gents, thank you very much. Dale, have a great interview with Rohit this morning, and thanks for guiding us every day.
Can you please promote him? I'm not able to. Something changed.
Yeah, I'm gonna do that. Rohit, make sure you select.
No, I can't even send him the request for him to.
Okay, let me see if I can. Let's see. He should, Rohit, you have to hit accept, and he's been here 1,000 times, so he should be able. He's coming over. Okay.
But I lost the function of being able even to request that they accept today.
I love Zoom. Zoom is awesome because you know what happens, Dale? Every night, Steve, he comes in late at night while you and I are sleeping and fiddling with all the little gadgets and saying, let's mess with Dale today.
Yeah, I know.
That's exactly what Steve does, that son of a bitch.
That's our relationship. Anyway, thank you, team. Thanks, Kay, Ryan, and Blake.
Cheers, mate.
Cheers, buddy.
Cheers, buddy. And great. Thank you, Kay. And great to have you back, Rohit. I'm interested in seeing where your work is telling us we're heading. So, okay, that's not you. That's are you here with me, Rohit?
Yes, I'm very much here. Thank you.
Okay, all right. Good evening. Great to have you back. So, you know, I do recall some of what you were talking about last time we were here, so we had a little bit of a delay. Has your forecast changed, or are you still a bear?
Oh, no, I very much changed. I think the last time I was, talking to Blake, we'd pretty much flipped in March, and that continues to be the case. I think the whole fear that I had was essentially around the possibility that the bond market remains down or sells off further. And that fear has significantly been put off the table, which is why I think the case has flipped to being much more bullish. And specifically for India, a lot is happening. A lot of things are likely to change also in the coming months.
Okay, are you no longer bearish gold? Are you bullish gold?
Oh, I'm very bullish gold. That I've always been, and I never turned bearish on gold.
Well, you know what? I hate to push back, Rohit, but last time you were on with me, you were bearish gold, you were bullish as dollar, and you were bearish indices.
Yeah,
okay, I don't know. I know things change.
Yeah,
but we can't revise either what was said in the past. We have to answer what caused the change, and now you're bullish gold. So, you know, we talk every quarter. So it wasn't that long ago. Let's see your charts and what you're thinking now.
Yeah, so the whole reasoning is around what the bond market is doing, and a couple of charts that I just wanted to highlight because there's a lot of discussion around inflation. So we have an entire phase, in the 40s where we've seen a lot of inflation spikes. I don't know if this is going to be the scenario, but it is something worth thinking about because you end up getting very, very different outcomes based on what we actually go through. We often just compare one time period and then it all starts looking like that. I mean, most of the comparisons are of the last 20 years or maybe only the 70s inflation. And if there's inflation, it's supposed to be bad. I mean, the only way you can slow it down is possibly, really harm the economy. But we did have several recessions and inflation spikes through the 40s and 50s. So I just, whenever I go back to the bullish case, I try to think about this. Can we really have something similar? Because it also started from a period of high debt all the way back here, World War II, and then after that, all the spending, which caused inflation, but also had mini recessions every time we had inflation come down. You had these mini recession periods. Can we really have something like this? I think that's the bigger question. Now we try to understand in that context what we are really doing. Another chart which I want to get over right at the beginning is this one. Also, a lot of the comparison we do today of where the yield curve is based on what happened in 2000, 2008, 2006. Okay, but what about this? This was a real mess, and why can't it be a little messy over here as well? I really don't know why it can't, and we just say it's like this, so it's going to be like this, and well, it can be messy. So these are two things to get out of the way. So that we can think a little more clearly. So this is what I'm thinking of the bond market. You're right. I had fears on both the dollar and gold, but more on the dollar than gold and the bond market. So that is why I mentioned that. And I was thinking that the fifth wave is possibly pending on the bond market. So that was my last thought. But what has ended up happening here is just a three-wave bounce in
failing rally.
Yeah, so it ended up failing at a lower top. So therefore, if it's three waves, it's most probably a B wave. So I've just readjusted my counts to complete the fifth wave here. So that doubt which I had, I think is almost clear that this was, we didn't have a pending fifth. Now, that takes away a lot of risk, at least from the 1 to 2 to 3 year period where you'll see this counter trend fall. I don't know if it will be one way, or is this going to be a larger 5, 3, 5 kind of structure, or it's just A, B, and then C. That is something we'll have to figure out along the way. But I've just put two retracement lines here, 50% and 60%. One is at around 2.9%, other is around 2.4%. So those are possible bigger retracements. 2.9 also comes close to this fourth wave low. So that's sort of maybe a minimum that we can think of going back to if this plays out the way I'm thinking.
I concur. I think there's a stop at about 358 before that, but I think you're looking at maybe C being 1.618 of A to get to those levels.
Possibly bigger than that. So I only thought of the fourth wave of lower degree, which is this as being an objective, and that's sort of being close to 50%. I didn't do the 1.618 Fibonacci.
Got it.
Because visually it looks like it might be much bigger if I do a one. I mean, if I do C, this size C would be bigger than one for sure, maybe even 2.618 times. Let's see. So with that context, I go back to the Indian bond market, and this has been one of my long-term charts. Here also the only fear of mine was that if this triangle is forming, if the global bond market falls off further, then we might still have done E and then started the next leg down, or have we done E truncated here? This has been my problem for the last 2-3 years. Sometimes when I'm bullish, I say E is over. And sometimes when I'm a little more bearish, I say E is pending. That's about where I go back and forth. But we are at the fag end of a B wave, longer term triangle. And if it is over, then what we do see from this point is a impulse down, and we've not made a new high. So I'm thinking 1, 2, and 3 down starting. So I think the sell-off in US bonds, as bond yields, that is the rally in US bonds, would also be followed by a rally in Indian bonds, and possibly much bigger in Indian bonds, I think, because this wave C is already done. I mean, US bond market is down here and starting to come up from there. We are just starting to head down on this path on a very long-term basis. So, and a lot of triggers have happened recently. Last year, the Indian government bonds got included in the MSCI index. Just now, yesterday, there was news that JP Morgan is also including it in their index from the 28th of this month. And so as that happens, we expect that, there'll be a lot of foreign investors coming into the Indian bond market, another thing which would probably drive these yields lower. And so lower interest rates are a big trigger as to why valuations in India, to some people, appear high and remain elevated. But on a sector and stock specific basis, it varies. Like there are some stocks that could be high. There are others which have, not gone up at all and they are low. And these are not companies which are, high in debt also. They're just going through a business cycle and they've been undervalued and they're getting attention. Like even government stocks, for example, till 2 years back were not getting any attention.
What kind of stocks? Gambling?
Sorry?
Gambling? What kind of stocks? Gambling stocks?
No, I said government.
Government. Okay, so here's my question. My question. I concur with what's happening globally. Global bond markets pretty much are all going to be in sync, probably just a difference in magnitude.
Yes.
So the question is, a weaker dollar and lower yields should be jet fuel for risk. How long does it stay jet fuel for risk before the markets kind of recognizes why are yields coming down? And they may be coming down because there's a problem with growth, which means there could be a problem with earnings and even a possible growth scare recession. So how long does this fuel the mania that's been going on for a while before it's a tipping point that lower rates are good when you're talking about measuring valuations and earnings, but lower yields are happening for the reason because we have slowdowns happening everywhere.
Yeah. So I've just opened the dollar chart to get a sense of that. And when we look at each of the dollar bear and bull markets, like this fall, then this rise, then this fall, some of the dollar bear markets lasting for around 7 years, 9 years, some of the bull runs also lasting for between 7 to 9 years. So that's sort of an approximation of time. So in 2008, sort of, I made the same approximation. I said, okay, if it's going to be 9 years from here, it's 2017. So this is sort of where I thought initially that the dollar bull market would end and, gold would bottom. Well, gold bottomed, but the dollar bull market didn't end. So that's part of the reason of, getting caught off guard, I would say, is this. Okay. And now when I look at it, it's possibly in the long-term channel, just the last spike for the dollar bull run, right? So you just got Z as I've marked here, usually the last wave of a counter trend move. So that puts us now at the start of the dollar bear market rather than, it should have been here. I thought initially the dollar bear market starts here. But now I'm saying, okay, it starts here. Now, if I put the same timeline, which is 7 to 9 years from here, even if I take the minimum 7 from 2022, we end up at around 2029. Okay, so that sort of gives me, sorry, sort of gives me a time horizon to play with, that this could be pretty long in terms of number of years. It's not something that should end in 6 months or 12 months. It should be something that's going to go on for a couple of years, which then fuels a lot of the emerging market. Let's say every time you've had a dollar bear market, there are two things that have happened. One is the commodity cycle, which is a beautiful intermarket divergence, which means that the new high in the dollar in 2022 did not result in a new low in commodity prices. And that is, I think, a very strong long-term signal for the commodity complex, because that means that the 66% retracement we saw in the Bloomberg Commodity Index is only a wave two.
Right.
I can actually just show that chart.
All right. Well, looking at this chart, are you looking for wave B that high if you go back to where you were before? That prior chart.
Yeah, so no, I'm not looking for that high. I mean, I just put it there. Wave B could also end right in here, because this entire structure is sort of like a triangle, a diamond kind of pattern. Yeah.
All right. Doesn't it look like we're on the precipice of a breakdown under 104?
Yes, it does. It does. So I'm just watching those weekly averages. The weekly averages on the bond market have broken, but on the dollar have not. So both have not confirmed. So that remains the last point. You're right. Once we break that, then I think sort of I would conclude that B is done over here. So that is the last support that we are really watching. And what I was trying to get at is the immediate impact of that. First, I see is the Bloomberg Commodity Index here, which had this long bear market, WXYZ. I was referring to this intermarket divergence, so the new high is approximately 2 years apart between the DXY and the commodity index bottom. And that's this is pretty much normal. I mean, it's the same thing we saw in 2008 to 2011. You didn't see a new low in the dollar index itself, but you did see new highs over here in gold, copper, and some of the commodities, silver. So the same thing here. There is a lead lag, but eventually we are heading to what is going to be a dollar bear market and what is going to be a commodity bull market. So this is sort of the bigger picture. The other thing which happens with the dollar bear market is emerging markets, right? We saw that between 2002 and 2008, emerging markets had a beautiful run. And if I simply move to, say, the EEM, right, the MSCI Emerging Market Index. Okay.
So let me ask you this: with the falling dollar,
you're
not necessarily saying that the S&P. I want to get to the S&Ps, but but it is going to be more bullish for non-dollar denominated equities and possibly bonds because of the weakness in the dollar. that other markets, that money will flow towards the emerging markets more than the U.S., which, you know, that old thing about exceptionalism, we're going to get a pretty good chink in that argument with a bear market in the dollar. So U.S. may not end up being the cleanest dirty shirt going forward with a bear market in the dollar.
So it's more of a relative performance question, which means that it doesn't mean that the US market goes down, but it does mean that when emerging markets start breaking out and have the MSCI EM index on board,
US
which is just breaking out.
underperforms. Well, that's
US
a big
underperforms.
deal because
Yeah.
it's been overperforming for years now.
Yeah. Yeah.
Right.
Now, will all the emerging markets do it? So the EM index is just starting to break out. But if I look at India in specific, where I am, we have already been outperforming the US. So I'll just show you that chart. This is a ratio chart.
Yeah.
This is a ratio chart of the Dow Jones to the Sensex. Okay, both are 30 stock indices.
Well, you picked the weakest index to measure it against. Okay, well, it's true, isn't it? I mean, why don't you put it up against the Qs, bro? And I think you'd have a different picture.
That's a fair question.
All right, go ahead. You have a selective research on this one in favor of India. So, okay, go ahead.
Yeah, so definitely on this one, very similar to what we saw.
You're a tricky guy, you know, but you know, you can't get much past Dale Pinkert when you're trying to do these things. So go ahead, buddy. I'm not your normal host. I trained. No, anyway, go ahead.
Yeah, I'm looking at the same period essentially when the dollar was in its last bear market, which is 2002 to 2006-8.
Yeah.
And during that phase, you had the Sensex outperforming the Dow, not here, right?
Yeah.
So the same thing happened here. We had the Dow outperforming the Sensex till 2020. But now you have the Sensex beginning to outperform the Dow. So that's just idea.
Okay. What do you have upside targets in SPX around 6,000 or 7,000?
Yes, I'm beginning to see that. So this is a wave count of the SPX here. I think, discuss this as an alternate last time, but it's now slowly becoming the primary because initially I was wondering whether this is going to be ABC, okay, and end at this. Now we are switching to marking it as an impulse, which means 1, 2, 1, 2, 3, 4. We have another 3, 4, and a 5 to go, which I think will get us past the 6,000 mark for sure. Will it get as far as 7? We'll see as it develops, but it opens up all those possibilities now that we're looking at an extended impulse in developing here. And so what I also want, if we want to still feel further comfortable with this, and what the bond market will do, is we should get those breakouts in the US banking and the US Russell, which is the small cap indices, which is where the broad participation should really kick in. So I've been watching that every day. When is it going to break out? Banking has given some signs. The Russell has still not gotten past its recent highs of the last 6 months. But once that does, then I think that would also be a clear sign that the environment has sort of changed.
And will people rotate out of tech to buy Russell and so forth? Will tech begin to underperform? This is the value play that people have been waiting for a long time, right?
Yeah, so the relative performance question may be more short term. I mean, it's possible when the rebounds happen, like when you do those quick catch ups, you may get short term outperformance of those segments. But will it really end the tech rally? Maybe not. Okay.
Can you see anything that could trip up the bullish case for equities? Can we have a bear market rally like TLT back to about 120? That's only 38% back of the whole fall. If you look at TLT, could we have a bond market rally and stocks stumble?
So that is sort of why I actually started with this chart, that all the prediction around recession is based on 2000. Okay, what happened here, or what happened here in 2008. In these events, you had this small inversion, and then moment it started to steepen, the market fell, bond market rallied. And I think all the predictions have been around expecting the same over here. But each of these were non-inflationary environments, right? You had a period where after 1984, inflation was consistently down, the bond market was in a bull run, and that is not the situation today. And so when we are comparing these inversions with today, we are doing away with the other macro factors and saying they don't matter. I say they possibly do, because you need to compare an inflationary period with this, and the last inflationary period, it had lots of inversions, de-inversions through the 70s before you really got out of. So are we really looking at this thing correctly? I really wonder. And then if I look at the other thing, when inflation stopped rising and bond yields started to fall after 1982, the stock market started to go up. And
Right.
so why shouldn't that be the correlation, that when the bond market starts to rally, the stock market goes up? Why should it be the other way around? So will falling yields be a sign of a recession? Possibly not. They're just a sign that inflation is, behind us for the time being. And then that takes us back to this chart, right? It takes us back to the chart saying, sure, it's behind us. We can have future inflation spikes. But till that point, the market might just, have its own course.
Okay. You had pretty wild markets after your elections there a few weeks ago.
For a day, that was for a day, the market
Yeah.
was volatile.
Right.
They just got scared about what would happen if we ended up with a weak coalition government. Well, the government that has formed has been the same parties that have been together for the last, 10 years. So there was actually no reason for that fear. But I think people got excessively, there were a lot of bets on both sides of, the elections in India, a lot of speculation. If we actually look at the long short ratio, we had the highest long and short positions held by two major groups. One is the foreign institutional investors, and one is the local and HNIs, and those groups. And I think that's the cause behind the volatility. But that's it. It just lasted for a day.
Okay. Yeah, that was a pretty wild day. You have upside targets for gold and silver?
Yes. So I'll just open up my gold and silver charts.
And also, I wanted to ask you if your view has changed in oil, because I'm looking at oil possibly being able to rally back above $100. So
Yes, so I'm thinking of the entire commodity cycle, right? So if that means that all commodity prices start to rise,
okay.
the good news would be if they rise slowly, because then it doesn't have the kind of inflationary setback and fears, which is
Yeah.
usually when there's geopolitical risk, right? Right now, what we are thinking is not geopolitical risk. We are saying a weak dollar, low yields driving up maybe demand and therefore commodity price cycles. So that should not be an issue. So starting with gold, sorry, this is silver. In fact, today, I think if silver closes positive, my, RMI indicators will be triggering buy signals over here.
Okay.
And in the near term, at least, what we'll be looking for, I'll look at both the near term and the big picture.
34.
Yeah, something more than that, I think, because this is my first, this is my first wave, and I'm looking at, so this is at least $36. But I think it's not even that, because if I just subdivide, if I just look at this, yeah, somewhere around, both are pointing to the same place. Around $35, you're right, is the next target for silver. But in the big picture, and which is what really fascinates me, because silver has really underperformed gold for a long period of time. And I think in the big picture, we sort of completed this phase, where we were below the highs over here for such a long period of time, $30 odd. And we are breaking out of that. So I think we started the third wave, which gold is already done. We are starting this wave 1, 2, and we're starting 3. This should actually get us back to the all-time highs, or close to the all-time highs again, with something which has been long pending.
Okay. All right. Great presentation. Thanks for, trying to fool me with using the Dow in comparison study. And thanks for your transparency. And, we're all wrong at times, Rohit. You know,
Yeah,
it's about changing your mind when you have the evidence to change your mind.
very
And
true.
yeah, so really the big takeaway is global bond market rallies along with the weaker dollar.
Yes,
That's your highest conviction scenario here. And higher markets, risk on continues because of those two tailwinds.
right.
Okay, did I summarize it okay?
Absolutely, absolutely. We just didn't put any numbers to Nifty, but I think the Indian market just does pretty well or much better than most of the emerging markets.
Okay, and Rohit likes his domestic market. So I would pay attention to Rohit, right or wrong. He's more right than he is wrong over the years since I've been talking to him, and he takes W.D. Gans saying, if you don't learn how to change your mind, you won't have any change left. He's flexible to change his narrative when the evidence tells him to. So best way for people to follow you, work with you, you could probably show your website now, Rohit, so people
Yeah.
know how to find you.
Yeah, so there are a couple of things we do. There's of course web.strike.money. This is the new thing we've launched on essentially Indian markets, where you can get all the market data analytics related to the Indian markets on this platform, which is web.strike.money. And I do write. I still publish at indiacharts.com. And we essentially have an India Charts app, so that is the best way to really download and start reading the commentary that I put out on a daily, weekly, and monthly basis.
Okay, you also teach. You have a mentorship.
Oh yeah, we do a mentoring program once a year. We take a batch once a year and teach them from basics to everything till position sizing, Elliott wave analysis, and so on.
Okay. Well, may pips rain down on you.
Thank you so much.
Till the next time we talk later in the summer, early fall, Rohit. Thank you for coming here and sharing your work and putting up with my barrage of questions for 30 minutes.
Complete pleasure. Thank you, Dale.
All right, Rohit Srivastava. Follow him on X at India Charts. Great technician, in my view. And I love his work. So everyone, have a great day the rest of the day. Good hunting. And remember, don't just count your Elliott wave counts, count your blessings. And we'll wrap up the week TGIF tomorrow. Adios, everybody. Thanks again, Rohit.